A very, very good evening to all of you. And from India, only Ajay and I are here in the US, and rest of the team is in India. Wonderful to have everyone join in this evening from India for this webinar. I'll just give you a very small introduction till the time that Ajay, our subject matter expert, the CPA and wealth planner here joins in. I'll give you, well, I'm pretty sure some of you would have heard me already in the past, and we are doing your accounting and compliance work here in the US already. But still, it is a good idea for me to introduce myself one more time. My name is Navin Pathak, and I am a Chief Operating Officer and taking as a position of Chief Executive Officer of Entry India and Entry USA. Based out of New Jersey, in the central part of New Jersey, you can say 30 minutes or 40 minutes from the port of New York, New Jersey, and 40 minutes from the airport of New Jersey, that is Newark, EWR, and which carries the direct flights from Delhi and also to Mumbai by two airlines, Air India and United. So this one airport does that, and that is very, very close to us. So technically, we are strategically the most well-placed state in the US, coming from India. There is another route that you take from the other side of the world, that is going to San Francisco side, then that's a very, very longer route. So we are technically well positioned. Entry India owns Entry USA. And let me just, do the screen share part so that we can get into the mode of what this webinar is about. Okay. So this is compliance filings in the US. Everyone, if you're looking to open up a company in the US, or you already have a company in the US, keeping up with the compliance is a very, very, very important aspect of doing business in the US. Simple example, one of my client missed filing annual report, a simple one. He got a $75 penalty. Just sharing it with you, just so that you're well aware that there are certain items which we have to be very well be taking care of, not only perspective of keeping ourselves in the good books, but also as we move along in doing business, expanding our business in the US market. There are many other angles that can come across to play when you say you may want to be here on L1A visa. Let's say that I'm putting up a case where the government of US will be looking at your file, and any such compliances which are not fulfilled goes against your case. And at the same time, you're doing business in the US, you have a banking in the US, and then that, if goes in a good direction, they look at your track history, and that plays a very, very good load that you are a well compliant company in the US. It goes in your favor in multiple ways. And today in our webinar, of course, with our expert, we'll talk about it more in depth. Let's go to the next slide here. So Entry USA, the idea is to help the Indian exporters, manufacturers, entrepreneurs who want to expand their business in the US. What it means is that you have a product and you want to sell, or you have a service that you want to sell in the US. But mostly in our case, it is coming out to be the products. So what you say is that to expand in the US, other than one part, of course, is a company formation, because that gives you the foundation based on which you are doing banking, you're doing warehousing, you're doing e-commerce, you are doing business insurance. Also, it's a very, very important aspect, but many companies miss out on it. In America, it's like breathing oxygen and in a polluted air or non-polluted air. If you don't have insurance, then you are breathing oxygen in a not so clean air. Then you want sales facilitation. And just to share with all of you, we are about to start with our showroom area. We are calling it a India-US collaborative. It's a corridor, it's a center where Indian exporters will be able to host their products to showcase, not from the individual retail buying, but from B2B buying, where companies can come in, look at the products and place orders. So we are expanding in a right direction so far, considering how US-India business has grown from 2021 to 2022. And of course, with China, because of COVID and because of their policies, people are running away from them. Companies are in the US, especially. India is in the best position in whatever scenarios it may be, but India is in the best position, taking the advantage of this relationship. There is a lot that can be done between US and India. We will do our part, but of course, you have to do your part. We are here to guide you through these webinars and also help you with the support services on the ground, real time. As I said, company formation, banking, warehousing, trucking, logistics, customs, all under one roof. And with the immigration lawyer, with the corporate lawyer who can write your agreements, and of course with the showroom and sales facilitation team to help you get to the clients and make the sales. So, well, focusing again on this webinar particular, we are talking about taxation. We were talking about keeping ourselves compliant. So now going to the next slide, I've talked about myself. I'm with Entry USA, being in US for last 28 years, since actually it's going to be 29 this year. I'm ever since I'm here, I've studied my engineering and started Entry India in 2006. And so we are well in 17th year now, going to be 18 this year. So amazingly great journey, doing very well. And we have with us subject matter expert is Mr. Ajay Gupta, based out of New Jersey, both of us. Ajay is one of the most renowned CPA here in New Jersey and in the US, with extremely vast experience. He's not only a CPA, he's a wealth planner also. And as a matter of fact, he is also an IITian in computer science degree from Delhi. So Ajay, and now with you on board, I know we have limited time, so let's get started with our talk today. The floor is yours. So we'll start with 1099, Ajay. So you take the lead now.
Absolutely. Thank you, Navin. Thank you for the kind introduction. Thank you, everyone, for joining us. And the intent behind this webinar, we have been getting a lot of calls on what should be the filing, what do they need to be doing at the year end, what are the obligations each company has. So in this, we want to cover the common compliance related filings that everybody is exposed to, that everybody has to consider. And the intent is, if we have 10, 15, 20 people in this webinar, it will help us save time so we don't have to speak to everybody separately. At the same time, you get the help without paying for it, meaning you don't really have to be paying a qualified person to be helping you, to be getting the help that you need to know what you need to know at the end of the year or at the end of the business cycle that you have. So this is the time of the year when a lot of 1099s are filed, 1099. And the 1099 at a high glance are filed not when you are making money. It has nothing to do with income tax. You do not pay anything to the state government or the federal government. Federal, when I say federal government, you want to consider central government. So central government and the state government. So in 1099 filing, there is no money paid out to central government, meaning federal government, or to the state government. 1099 is more of an information filing. It has nothing to do with how much money you made, if you were profitable or not. It's all about making payments. Let's say you started a business in 2022, June. In last 6 months, You did not make any money, no revenue, zero revenue came in. But in order to grow the business, you made certain payments, you spent money. So the 1099 is about making, documenting those payments with the government. If you are making payments to anybody, any independent contractor through your business, for the business, you want to document it with the government. And that's what the 1099 does. So the rule is, if you paid more than $600 throughout the year, not in one transaction. Let's say if you pay somebody 200 in June, 200 in July, 200 in August, 200 in September, in total, you paid $800. So you still have to do the 1099 filing. It's a mandatory filing. So if you paid more than $600 in total to somebody for the business, you need to file a 1099 for the person. In order to file the 1099, you need the social security number or the EIN, employer identification number. Now, if you paid this money to an individual, that individual must have a social security number, should have a social security number. So you need that social security number. You need their address. You need to know how much amount you paid, and you need their full name. If it's a company that you paid this amount to, instead of social security number, you will need the EIN number. So 4 things we need to issue a 1099. The 1099 is issued to social security number or EIN if it's a business, full name, full legal name of the person or the company, amount that was paid, and the address. Now, in a lot of cases for the new businesses, you find yourself in a situation, I paid the amount, but I did not take their social security number. I don't know their EIN. So there is a form called W-9. You need to get a form W-9 from the vendor. Whoever you're paying the money, you say, my accountant is asking for the form W-9, very commonly used in US. Form W-9 is a half-page form, has only 4 things. What 4 things does it have? Same thing, name, address, social security number, and their signature. That's it. It's a very simple form. This form is used to collect the basic information from the vendors, from the person you are paying the money, so you can issue the 1099 throughout the year. If you did not collect this form earlier for 2022, try collecting it now, and you will find yourself that some people are not giving this form only because they don't want the 1099. Then next time when you do business with them, before making the payment, you try to get this form signed first. So again, the 1099 is an information filing. You do not pay any taxes. This is to document the expense, not the income. You only file when you pay more than $600. You need 4 pieces of information, name, address, amount, and social security number or EIN. You file this form only for business expenses, not for personal expenses. Now, this is the general guideline. Now, some exception to the rule, you do not need to file this form if you pay the money to a corporation. If you paid the money to somebody who has INC in the end, you do not need that. Sort of they're exempt from this 1099 filing. You do not, if it's an LLC in the end, you need to file it. You must file the 1099 to the attorneys, even if they have INC in the end. So there are a couple of exceptions here and there. If you have a babysitter, gardener, housekeeper, and the expenses that you paid are meant for your personal expenses, your housekeeping expenses, not for the business expenses, then 1099 is not needed. 1099 deadline is January 31st. Moving on to the next slide. And we can take the question anytime. If you have the questions throughout the slides, please feel free to put your questions on the chat box, and we will be happy to take them along, or we can take the question in the end, however it works out for you. But please make sure, forget about our time. You are spending an hour in the evening, make sure you get your questions answered. If you are hesitating in speaking, just put it on the chat box and we'll be happy to take it for you.
So Ajay, there are two questions there. So first question is by Amrita, and she's asking, we started only in December and haven't done any transactions yet. Do we still need to file 1099?
No, 1099 is only to document the expenses. If you paid no money to anybody, or hypothetically, if you did not pay more than $600 to somebody, you do not need a 1099 filing. So 1099 is only needed to document your expenses, to certify the expenses. Then you cannot be audited for that expense. If you issue a 1099, you cannot be audited. We will not ask you any question related to that expense if the 1099 is issued. Let's say hypothetically, sometimes a lot of people pay in cash and they don't have any receipt, any proof of paying. If the 1099 is issued, then that expense is valid, certified, legitimate expense. But if you started a business in 2022 and you have no expense paid out, you don't have any 1099 obligation.
Okay, now second question is, Dhanshu Garg is asking, we pay our payments overseas to vendor. Do I need any form signed from them?
Yes. In this question, I'm assuming overseas means they have a US company and they are making payments to foreign company, not in US. And these foreign companies that are not US companies, they are not registered in US. So if a US based company making payments to companies outside US, which have no offices, no presence in US, then the form number is W9BEN. Instead of W9 regular form, you file W9BEN. But in that situation, we can have a conversation separately. I did not want to confuse this presentation, so I'm trying to keep this presentation sort of which is common for everybody and simplified. If there are no other questions, I can move on to the next slide.
Yes.
So again, there are two types of major compliance over here. We have the federal government, again, more of a central government, and state government. And every company has to do certain filing with the federal government, with the state government. So going back to the 1099 slide, when we do the 1099 filing, we'll send a copy of the 1099 to the federal government and we'll send a copy of the 1099 to the state government. So all the filing, the income tax filing, the 1099 filing, whatever filing you do to be compliant in US, you do all these filings in duplicate, meaning all these filings are supposed to go to the central government and to the state government. Now the question is, which state? I do business in 2 states. I'm registered in New Jersey and I have an office in New York. Then you do the filings in both states. So all the compliance that you will do, including but not limited to 1099, the income tax, all such filings needs to be done in duplicate, triplicate, meaning you will do the filing with the federal government and you will do the filing with the state government wherever you have an access. Now, moving on to the next slide where we have the 1099 for a contractor. So we covered this slide briefly earlier. We need 4 things. If you want us to issue a 1099, we need 4 pieces of information. All these this information is covered in the form W9. And I highlighted in the slide down below, the penalties for filing are extremely high. And the penalties for filing 1099 can be duplicate, meaning the federal government, the central government will charge their own penalty, the state government will charge their own penalty. So that can sort of add up. And especially when you do not have any tax obligation, meaning it doesn't matter if you paid somebody $1,000 or $1 million, you're not paying any tax. It's just an information filing. It's a good idea to do such filings just to make sure you're not missing anything. Now, income tax return, moving on to the next slide. We covered this slide. The second sort of compliance that we have is the income tax. Navin, if you can please move on to the next slide. So every company, the way we have the 1099 must file the income tax as well. Navin, if you can please, oh, I see, got it. So income tax is not about income. Even though we call it income tax return, it's more of a mandatory filing. We get this question all the time. I did not make any income. You said the income tax filing. If I have no income, why do I file the tax? So consider this, and I kid about it. I joke about it. So it's the entertainment tax. So you make a movie and the movie is sort of not entertaining anybody, but you still have to pay the entertainment tax anyway. Meaning the income tax is more about, it's a mandatory filing. Even if you did not make any income, if you have zero income, if you lost money, you still have to do this mandatory income tax filing. Depending on the type of business you have, if you have losses, especially then, it's very important to do this filing. So the losses you can preserve by doing the filing. So whenever you have the income coming in, you can use the losses that you had in prior years to offset the income. Let's say, for example, you just started the business in 2022. And in 2022, you had $10,000 of loss. You still have to do the filing. By doing the filing, next time when you make this $10,000 in your business, you don't have to pay the tax on the first 10,000 because you showed to the government that you lost $10,000 in this business. So not only is a mandatory filing that you have to do with the federal government, with the state government, you have good reason doing the filing. If you made money, then you have some tax obligation. If you lost money, you want to preserve those losses. The income tax rate is 21% on the income. Let's say if you have $100 collected in US, you can say, you know what, in order to collect $100, my India office was supporting my US office. So I paid $99 to my India office to support the US office. So my income in US is $1. So you pay only 21 paisa on this, in this example, to the US government. Meaning whatever the net income, not the gross, not the revenue, whatever the net income after taking out all the expenses, paying to the India office, paying to the back office, whatever the net income, the bottom line income you show, only on that income you pay 21% to the federal government. The state, and again, remember I said in the beginning, all filings are in duplicate. The federal government will have a filing, the state government will have a filing. So the state income tax rate varies from 5% to 9%, depending on which state you're talking about, but it's typically 5% to 9%. So in total, you want to consider your total income tax rate, again, based on net income, not on the gross, is about 25% to 30%, including federal and state, where federal is about 21%, and the state tax rate is about 5% to 9%. The deadline depends on what type of business you have, which state you're registered in. But for most cases, for LLC, this year is March 15. For C Corporation, typically it's April 15th. But this year, April 15th being the weekend, now it's been moved to April 18th. But please be careful. If you are not sure, ask us. We'll be happy to help you understand. Just because the deadline is in April 15th for C Corporation, that does not mean you file the taxes in April. You still want to file the taxes sooner than later.
Okay, Ajay, can we take a couple of questions?
Yes, of course, please.
Okay, Gaurav is asking, what are the monthly returns?
Sure. So there is no monthly returns. It depends on the business. There are certain returns where instead of quarterly or yearly, you have to file monthly. For example, sales tax, or we call it VAT tax in India. So if you are collecting more than $500 in sales tax, then you have to file the sales tax or replace the sales tax with a VAT tax every month. Typically, most cases, sales tax, if you're not collecting more than $500 in a month, sales tax is filed every quarter. But in some cases where you are collecting more than certain threshold, and the threshold in New Jersey is $500 in sales tax, every state will have a different threshold, and we'll be happy to work with you to help you understand. In that case, your sales tax filing becomes monthly. Then if you have the payroll, there are certain monthly payroll tax payment to the federal government, to the state government, depending on how much tax you have. Most payroll filings are quarterly, but depending on how much payroll tax you are paying, it could be monthly or bi-monthly. But all that's applicable if you have the payroll, if you have the retail sales. So sales tax comes in picture if you have the retail sale. If you have the retail sales, then you have quarterly filing or potentially monthly filing. If you have payroll, then you can have quarterly filings or monthly filings. In this presentation, the intent was to cover filings that are mandatory for everybody. It doesn't matter what kind of business you have. These are the filings that you should be considering. That's the presentation that we had here. But depending on what kind of business you have, if you are exposed to sales tax, tire tax, liquor tax, payroll tax, there are 27 different type of taxes that we have in New Jersey. Each state will have their own list, and we can help you understand if any one of those taxes needs to be paid quarterly or monthly. Most taxes are quarterly, but if you collect more than certain threshold of the amount, then it becomes monthly.
Okay, Ajay, moving to the next question. We have Rahil here. Hello, Rahil, sir. Hope you're doing well. So Rahil is asking the question, if someone pays $600 to an agent or a company such as Entry India in a year for various services such as company registration, tax compliance, etc., does he have to file 1099?
We should. Entry India, I'm glad you took this example. Entry India is an LLC. All LLC should get a 1099. So in theory, Science CPA Services is a corporation, does not need a 1099, but all LLC should be issued a 1099, especially Entry India type of transactions.
Okay, wonderful. So now we have a next question is by Rajiv Gupta. If we registered our business as LLC in January 2022, but have not had any transactions yet, do we need to file the income tax return?
As we discussed earlier in the last slide, income tax return filing is a mandatory filing for every company. It does not matter if you had income. It does not matter if you had transaction. It does not matter if you did not even open the bank account. You have a business, you have a mandatory filing, and that's called the annual income tax return filing. It has nothing to do if you made money or not. You must do this filing, and you have to do this filing in duplicate with the central government, with the federal government, and with the state government. In some cases, depending on which state you are registered, you will have a minimum tax payment to the state. Say, for example, the state of New Jersey will charge you $500. It doesn't matter if you open the company on December 31st or January 1st of 2022. It does not matter if you open the bank account or not open the bank account, or had transaction or no transaction. Most states will have a minimum small amount that you have to pay every year and must do the filing every year.
Okay, so Rajiv is asking next question. What about Wyoming?
So again, Wyoming is a state. So in this case, you will do the filing with the federal government. Wyoming does not have the personal tax return filing, but depending on what kind of business you have, you will have the business tax filing in Wyoming. So all companies must do two types of filing. The central government tax filing, we call it federal or IRS. and the estate tax filing. There are certain states, Wyoming, Florida, a couple of states where we don't have the personal income tax. In that case, you don't have to file the personal, individual, your own income tax in that state. That does not apply to the business. So just be careful what you read on the internet, and make sure you get in touch with somebody who know what they're doing. All filings, especially for a business, are mandatory filing.
Okay, Rajiv has asked next question, but LLC has to file with state as well as federal.
It depends how the LLC is classified. How many members you have in the LLC. Is it a single member LLC, multi-member LLC? Is it classified as 2553 filer or 8832 filer? For the most business, you want to assume that LLC will be doing certain filing with the federal government or the state government.
Wonderful. Okay. So no more questions. Let's just get to the next slide. Here we are.
Okay. So this is the third and the final mandatory filing. And there are a lot of other filings. Before I cover this slide, I want you to understand there are a lot of other types of filings that are possible depending on the type of business you have, depending on the type of structure you have. It could be the payroll tax filing if you have people hired in the state. In US, if you are having retail sale, you may have the sales tax exposure. If you are making tires, you may have the state highway tax exposure or tire tax exposure. If you are selling liquor, you may have different filing exposures. So depending on the type of business you have, you may have additional tax exposure, tax filing obligations. In this presentation, we wanted to cover first the 1099. We were getting a lot of questions about 1099, and we wanted to clarify 1099 is not about income. It's not about making money. I did not have any money coming in. 1099 is more about certifying the expenses. If you had no expense, no 1099 is needed. The income tax filing, the federal income tax, the state income tax filing is needed even if you had no transaction, meaning you had no credit, no bank account opened, you did not do anything, you still have the income tax filing obligation. The last one is sort of a license renewal. We call it, depending on the state to state, we call it, it's not sales tax, we call it annual report filing, license renewal, excise tax filing. So each state will have a different name to it. So in most states, we call it annual report filing. So this is basically letting the state know that we are still in business. We still want the company as an active company. If you miss this filing for, in most states for 2 years, in some states for 3 years, they will deactivate the company. Then the filing obligation continues, but in order to do the filing, you have to reactivate the company first, and then anybody can take the company name. It's a simple filing that sort of certifies this company is active. These are the current owners. This is the current address, and this is the line of business that this company is in. So the information that you provide in the beginning to start the company, same information is attested every year, annual filing, just to confirm there is no change in ownership, there is no change in address. So every year the state is trying to sort of certify the same information. This filing is not done at the end of the calendar year. Annual report filing for this license renewal is an yearly filing. If you start the business in November, in next November, you have to certify the information. If you start the business in June, next June, you have to certify the information. We call it fiscal year filing, 12 months filing, as opposed to the income tax filing that's typically calendar year filing, unless you choose a different year. So in most cases, your income tax filing is going to be the calendar year filing, and this filing is going to be your fiscal year filing. Moving on to the payroll tax. Payroll tax, again, is needed only if you have the payroll. If you have people working for your company in US, only then you're exposed to it. Otherwise, you're not exposed to it. Most payroll filing are done quarterly. Payroll must be paid weekly, bi-weekly, or monthly, depending on what kind of employees you have. You cannot pay the payroll quarterly. So every time you make any payment to an employee in US, you have to withhold certain taxes and pay those taxes to the federal government and the state government. So the filing or the reconciliation of these payments are typically done every quarter. Depending on how much taxes you are withholding, how much is the total payroll, the reconciliation could be monthly. So if you don't have payroll, no payroll tax filing. If you have the payroll, then you need to understand the obligations that your company has related to the payroll taxes. Depending on how much payroll, how much taxes your company has the obligation for, the payroll tax filing could be quarterly or monthly, and will always be with the state government and with the federal government. Moving on, the estimated pricing. Here, and this is a very, very common question. How does it work? How much do I have to pay you? So it depends. These are general range that we have over here. I do not want to spend a lot of time onto it because everybody's situation is different. What I want to highlight, all of these filings are done through Entry India. In order for you to do any filing, you will get in touch with Manvi, Mr. Pathak. They will help you understand what filings are needed. They will help you understand how much it's going to cost. You will pay money to them and the filing will be done. It's a very, very smooth process. We have been doing it for years. We have hundreds of companies like yours. Let me correct myself. We have thousands of companies like yours. We have absolutely no interest to take your money and not do the work. We do it every day. So your money is safe. Even if you, after the work is done, you say, you know what, I'm not happy. Okay, take your money back. Don't come next time. So it's a business. It's not hit and run. We are doing webinars to make sure we are providing the free information that we would have provided anyway, but we are trying to save time for us. We are trying to add value to your business. So please work directly with Manvi, Mr. Pathak. There are general rates. They will be happy depending on your situation, depending on in what phase your business is. They will be happy to work with you to give you a price range and do what needs to be done for your business. Now, moving on, I wanted to show these documents as what happens. And the reason I wanted to show these documents, Navin, if you can please move on to the next slide.
Sure.
So the first document on the left-hand side is called SS4. If you look in the middle, it says Form SS4. On the right-hand side, the third line from the top, this is called the EIN document. It's called the Federal Registration Document. It comes from the central government, IRS. This document will show you what filing obligation you have. Let's say if you look in the middle of the form, it says 941. It's a payroll tax filing. So this business is required to do the payroll tax filing. And if you look on the top right-hand corner, this business is started on October 26th, and this business was supposed to have payroll. And the first filing, 941, is the payroll tax filing, is due or was due on January 31st, 2022. So this document, the federal registration document, lists the filing obligation you have in the middle. On the right-hand side, you see the state registration document. This state registration document shows who is the decision maker for this company, how many owners, what kind of company it is. It says INC. It means it's a corporation. Again, the 1099 is not needed if you made payments to a corporation. INC does not need a, this is called the state registration. So the left-hand side, you have the federal registration document. On the right-hand side, you have the state registration document. Now, in the next slide, I wanted to show you some other documents that are typically not done when you do the business registration through an attorney, when you do the business registration through an online website. These are the two registrations that they don't do. These two registrations are referred as the tax registration. If you notice that the registration on top, the third line comes from Division of Taxation. So anybody who did the registration through these online engines, they wouldn't really have this registration. In that case, we will have to charge them extra. And we are only showing one page. It comes with several pages. But if you look on the right-hand side at the bottom, it shows, and this is again just one page, it shows what kind of taxes you will be paying. So we see no, 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 no on the end, on the right behind bottom side. And if you look sales or use taxable goods or services, are you going to be selling the taxable goods? Do you need exempt purchases? So all these answers decide what kind of filing obligation you have. So if you are selling the retail sales, you would be saying yes to sales or use taxable goods, meaning this is called the tax registration document. The only reason I'm showing these two documents over here to highlight that, just look at your business formation documents, and if you don't see these two documents, then you must get these two documents registered ASAP to keep your business compliant.
Ajay, can you share, because this is the question that keeps on popping up, because these online engines, yes, you are right, do not provide the taxation registration. So the relevance, taking a real-time example, the relevance of this registration.
Absolutely. Absolutely. So it's one of those things. You started a business with the state, with the federal government, and you are not telling the state and the federal government what kind of taxes you are obligated to, what kind of, say, in this registration document, and we should have put in the whole registration document, but you see on the bottom right-hand corner, there are certain questions that they're asking. Are you going to be paying the employees working in New Jersey? And we said no. It means we will not be hiring employees in the near future. It means we don't have the payroll obligation in New Jersey in this example. So consider a situation when you do the registration with the state, you do the registration with the IRS, but you're not telling them what tax filing obligation you have. So they will have to assume that you have all the tax filing obligation. So they will keep sending you notices, and they will keep in their record, you become uncompliant for all the tax filing because you never said no to this filing. So this type of tax registration will help you minimize the notices, the compliance, and the problems that you can have with the IRS and the state in the future.
Got it.
Here are some of the frequently asked questions, but again, forget about our time. You have been here for an hour. If your question is not asked yet, please ask the question. Please put it in the chat box, and we'll be happy to answer it.
Okay, there is one question. I mean, there are a couple of questions seems to be popping in, but let me ask the first one. There is someone asking what is CAT registration, CAT, and what is the difference between CAT and sales and use tax registration?
Absolutely. So CAT stands for Combined Assessment Tax. There are some states that will try to tax based on how much revenue you are collecting from the state. The theory behind the CAT is that forget about the profit. You have the way to manipulate the profit. We want to charge you based on the amount of revenue you are collecting in our state. Not many states has CAT. States will have, there are some states, for example, Ohio has combined assessment tax, and this tax is based on the total revenue you are collecting in the state of Ohio. So the way we file this state CAT tax will add up the total deposits that you have in your bank account and then we'll file along with the bank statement showing the proof. We'll file the CAT tax. CAT tax is a quarterly filing, not applicable in most states, only few states. So if you are in Ohio or if you are exposed to CAT filing, we'll be happy to do the filing for you. We'll be happy to work with you. It's typically a quarterly filing and based on the gross revenue. Sales tax, on the other hand, you have the exposure only when you have the retail sales. The sales tax typically is a quarterly filing, but depending on the amount of sales tax you are collecting, if it's, let's say in New Jersey, that the threshold is $500. If you're collecting more than $500 in sales tax, then sales tax must be paid every month to the state. So the filing, CAT is typically quarterly filing, but the sales tax can be quarterly or monthly, depending on how much sales tax is being collected.
And use tax registration?
Well, sales and use tax is a single filing. So the way it works, let's say you have a restaurant and you're preparing the food and you're selling the food, but you're allowing all your staff to eat the food free of cost. So not only you're preparing the food for selling, you're preparing the food to use within your restaurant as well. In that case, you are supposed to be paying the sales tax based on the amount you sold plus the amount that you used yourself, because these people are supposed to be, these people meaning your chef, your waiter, your busing staff, they should have paid the sales tax if they had purchased the food. That's referred as the use tax.
Got it. Okay, so next question, Vikas is asking, does other country income make any tax difference in US income tax? Suppose we are generating some business in Canada and getting our income in our US company bank account from Canada. Is there any extra tax compliance on that income?
There should be. Again, it's a very, very case sensitive question. If I heard the example right, the money from Canada based company is coming to the US account. So when you file the taxes for the US company, you need to account for that money. You may not have a real tax obligation, but you have the filing obligation for that money. So there could be a couple of situations and we can look into it separately. But let's say in the first situation, $10,000 came from Canada and $10,000 was paid to India, meaning 10,000 came in, 10,000 went out. You still have to report in your tax return in your US company that my revenue is 10,000, my expense is 10,000. So my income is zero, so no income tax. But you still have to report how much money came in versus how much money went out. The second situation could be your Canadian company is a different company, US company is a different company. Then we have to understand why the Canadian company's revenue coming to US company. What kind of nexus, what kind of relationship we have between the two companies. Case sensitive question, but in general, if you have money coming to the US company, you do have a filing obligation. If you are going to have the income tax obligation, payment obligation or not, that we have to look into based on the profit and loss statement based on your situation.
Okay, so Gaurav is asking, is CAT applied in New Jersey?
CAT is not a New Jersey filing. But well, I'm not sure if I heard the phrase right. In New Jersey, we call it CAT, not CAT, not CAT. So combined assessment tax is typically used in Ohio and certain other states. We don't use CAT, CAT in New Jersey. We have a different name. It's called combined assessment bill, CAB filing. So every state will have a different nomenclature. CAB is a filing that's needed if you have the payroll. It's supposed to be under $50 at the end of the year, every year, but there is no CAT, CAT filing. We have CAB, combined assessment. So every state will have a different type of obligation, different type of filing. You have to be careful what kind of, which state you are in, what activities you have in that state, and what are the related filing obligations you have in that state.
Okay, so now next question is, if our business is registered in New Jersey, do we need to register for CAT in Ohio if we have customer located in Ohio?
Well, typically not, unless you have, just because you have a customer in Ohio and you are making the sales in Ohio, you may not have a nexus over there. If you have an office, if you have somebody working in Ohio, if you have a warehouse, a fulfillment center, then you have to register in Ohio as well. It's all about where you have the nexus. Just because I happen to have a website design company in New Jersey and my customer is located in Ohio that I'm making the website for, I do not have the Ohio filing obligations.
Okay. So now next question is, Gaurav is asking again, will CAB file quarterly?
No, combined assessment bill is a byproduct of the payroll filing and is typically, there is no filing. It's a small bill under $50 that you get at the end of the year.
Okay. So, okay, well, no more questions there left in the chat box.
So
Let's come back to the
let me
screen.
cover frequently asked questions quickly and
Yes.
then open up the floor one more time and then we can wrap it up.
Yes.
So how important is to file my annual tax return? It's extremely important to file your annual income tax return. If you don't, so consider two reasons. Either you're making money or you're not making money. If you're making money, the government will chase you down to collect their fair share of the income tax. If you're not making money, if you're losing money, you want to document the losses. So next time you make money, you don't have to pay the tax on the money that you already lost. So it's extremely important, not just that it's mandatory. The government wants you to file the taxes. You may not have the income tax exposure, but if you want to have the business in the US, make sure you do the filing. If you tried, you are done, then let's close it properly, dissolve the company officially, properly, so you don't have the continuing filing obligation. The problem is sometimes people give up after a year, 2 years. Say, I tried, even though they did not really try it, they did not do anything, and they say, "Oh, what's the big deal? I'm not going to US anyway." But you never know. Anybody related to you may come to US, and then it sort of pops up after 10 years. You have this company, and you have the 10 years filing obligation. So something that can be resolved in a couple of $100, few $100 now, could create a situation which is much larger, much bigger in the future. So why go? Now, the next one, should I file the annual tax return even if I'm not making revenue? I think we covered it. Annual tax return is a mandatory filing. Just because your movie is not entertaining does not mean you don't have to pay the entertainment tax. So what if I don't file my return in time? Well, Mr. Pathak just took the example earlier. One of the client did not file the annual report in time and the state charged them some penalties. So the state can charge penalties, whatever they want, increased very high penalties in hundreds of dollars, in thousands of dollars. They can deactivate the company. I mean, why go there? If you don't want the company, just dissolve the company properly, officially. Do I need to file sales tax and where? Yes, sales tax is needed to be filed if you have retail sales, and sales tax is filed with the state government, not with the federal government. If you have the exposure, you need to do the sales tax, and the sales tax is filed typically quarterly, depending on how much money you are collecting, depending on which state we are dealing with, it could be monthly. What is the penalty if I don't file my return, even though there is no revenue? The penalties could be high. So it's not about the revenue. We covered it multiple times. It's a filing obligation. So the penalties typically starts with a couple of $100, depending on how late you are, how many months late you are, how many years of filing, depending on what other filings you are missing. Are you a habitually late person? Or typically you do all the filings on time, but unfortunately you just missed one filing. So there could be several situations which can result into different penalty amount, but it could be a couple of $100 to, there's no limit. I have a client who got a bill of $80,000 for the late income tax filing because he did not file the extension. So we just became the client, just came over last month. He couldn't believe $80,000 of penalty because his extension was denied. Nonetheless, moving on, what is the interest rate charged if I file my return late and I owe IRS money? That depends. Right now we have 7.5% of the prime rate. It changes every quarter. IRS doesn't ask you. IRS decides the rate. It's public information. You can go on the internet. What's the quarterly IRS rate on the amount owed? You can search for it. It's typically, but it's not the interest rate. They have several other penalties that they can charge: underpayment penalty, late filing penalty, late payment penalty. There are multiple penalties that you will have to face if you file your tax return late. It's not just the interest that you want to be worrying about. Does non-compliance impact the possibility of me to get L1 visa? Absolutely. So L1 visa is a business visa. If your business is not compliant or habitually late, then look at it from the government perspective. Can we trust your business? What if we give you the L1 and you don't really pay this person what you promise, or you start paying this person late? So it's the L1 visa, and I'm not an immigration expert. We can have a separate webinar with the immigration expert. Comes with a lot of paperwork. I have been part of some L1 visa applications. So a lot of paperwork, including but not limited to multiple years tax returns, several attestation, several reports from the state, from the IRS that we have never been late. We paid this much taxes. It's a huge process. It's a huge undertaking. And if you really are interested in the immigration, the last thing you want is to play with the government. Any other question that we have in the chat box, please?
Yes, there are a couple. Okay, now someone is asking. They asked the question regarding CAT in Ohio. That's the question with respect to that. He says, so if company registered in New Jersey exceed the threshold limit set by Ohio, we need to register only for sales tax and not CAT.
Well, CAT is going to be based on the revenue. And sales tax is based on the retail sales. So take an example. Let's say if you have business to business sale, meaning your business is not directly selling to the consumer, your business is selling to the other retailers, or you are selling business to business, then you have no sales tax filing exposure. You are exempt from the sales tax, but you have the CAT exposure. You still have the revenue coming in. So there are two different filings with two different requirements, and they are not, they're independent of each other.
And for Ajay, let me ask this question on this behalf. Is there a limit that somebody crosses in sales that they have to file for CAT?
Yes, every state will have a limit. In Ohio, it's $1 million. In some state, it's $400,000. Every state will have a different revenue limit for the CAT file.
Okay. Now, Gaurav is asking, what is Form 1120 filing?
1120 is a corporate tax return. So when you have INC in the end and you have a foreign company, typically you will do 1120 C Corp. So if you have been part of our earlier webinars, there are two types of companies that we can form for a foreigner: LLC or a C corporation. The C corporation does 1120 filing. It's a corporate tax return filing. It must be filed with the federal government, meaning the central government, the IRS, and the state government, wherever your business is located.
Okay. Rajiv Gupta
Yes.
is asking, what would be the charges for income tax filing for LLC in Wyoming and with federal government while LLC did not do any transaction?
So we covered the high level pricing, estimated pricing, all the pricing discussions you can have with the Manvi and Mr. Pathak, and we'll be happy to help you. Our interest is to grow your business. We are successful only if you are successful. Entry USA has a mission of bringing a lot of companies over here. We have just last year alone, probably we had 50 plus companies coming to US. So the pricing is sort of a necessary evil of the relationship. We have to pay somebody to do the filing for you. This is what we do for a living. But whatever the filing pricing are, please discuss the pricing with Manvi later on, and we'll be happy to help.
Sure. No more questions. If anyone has any questions, feel free to ask. This is a great time because we have Mr. Ajay online, and together it's everybody learns from the questions, not only one person, but everybody gets to understand. I guess that's it, Ajay. So wonderful. Thank
Absolutely.
you very much. Thank you, all the listeners here. Thank you for joining in. Manvi, um, may you please share the link of the form in the chat box so that everybody has access to it. Dear friends, if you have not shared your email ID in any way that we can communicate with you, then we won't be able to. If there is anything specific or unique that we want to share, so I request you share, if you have not filled any form, if you have ever filled a form, we have your email ID. But if you have not filled it and you want such details to come to you, please share your name and email ID so that at least we have these two things, and we'll be in touch. Fill the form that Manvi is sharing on the screen, on the chat box, and whatever the information there is, we'll be happy to help you. We are here, as Ajay said. Keep in mind, we are successful only because you are successful. Our job is not selling. We all, Ajay and Entry India, Entry USA, all the team, we make money when you create success. Of course, as Ajay put it very aptly, that money transaction is a relationship, evil side of it, but that is what we have to do. There are expenses here too, and at the same time, anything to help you out. Any other request that you have in mind, we run an entryindia.com portal also, on which if you are manufacturers and you have products that you want to for which you're looking for buyers, we don't charge any money yet. So you can talk about your products. What are you looking at? Distributors, partners, license holder, so you want to license the technology, anything, you are free to do that. And any which ways, in US, once again, we have a extremely great network, not only among the professionals, including Mr. Ajay. We have lawyer on board, immigration lawyer, and corporate attorney also. Sometimes you want to write those agreements. Who is going to write those agreements which are legally binding? And that's what we have. We have warehouses. We have e-commerce team. We have sales facilitation. We are putting up a showroom area where you can showcase your products if you want to. And also hire one person. We are putting it as it together so collectively the cost can be reduced on per company basis. So it's not only you, it will be a collective assigning of the space of real estate in US. Keep in mind, I can take you to New York City address also. There is some cost, but if you want to talk about it, I would love to share those details with you. We work very closely with the government of New Jersey and government of India at the Indian consulate. Not only government of New Jersey, we work very closely with the federal government also, their trade department. So there are a lot of accessibility to the resources, to the guidance, suggestion, and sometimes introductions that we can make through our relationship with our client partners. We don't want happy customers. No, I don't want a happy customer. I want a raving fan. Means not only that you will like it, you will love it to the extent that you will, just beat it out, that you are in good hands, and we'll do anything to help you out. With that said, thank you very much, Ajay. Thank you, all the participants. Thank you, Manvi. Thank you very much. Please fill the form, please. I request you, because this gives me access. And sometimes if you don't read a book, let's say in 72 hours, you get a new book, then you're not going to read it. Then once again, you will be looking for another webinar of this sort so that you can enrich your learning or start the work. Don't wait up. The time is perfect, and let's get started. All right. Thank you very much. Thank you. Okay, Ajay, thank you so much. Take care, everyone.
Absolutely.
Have a wonderful evening. Bye-bye.